The governor of the Bank of Jamaica, Richard Biles, has issued a positive report card for Jamaica. He says economic activity and employment continues to rebound while foreign exchange inflows are buoyant and the country enjoys strong international reserves. The governor was speaking during Monday's quarterly monetary policy press conference at the BOJ.
At the 16th of February 2022, Jamaica's gross international reserves were substantial, amounting to $4.3 billion and representing the equivalent of 140% of the level considered adequate. Looking at the Jamaican economy as a whole, the most recent GDP data published by Statin indicated that domestic economic activity expanded by 5.8% for the September 21 quarter, compared with the expansion of 14.2% in the June 2021 quarter and the contraction of 10.6% a year earlier. This outturn, therefore, represents continued recovery in economic activity for the country.
Governor Biles also reported that the labor market is on the rebound.
The latest data released by Statin indicated that we have an unemployment rate of 7.1% as of October of last year, 3.7% lower than that of October the previous year, and of note 0.1% below the country's pre-pandemic unemployment level in October of 2019. Real GDP growth for the financial year 2021-22 is still projected to be within the 7 to 10% range before moderating to from 2 to 4% for the financial year 2022 to 2023.
However, the country's inflation rate remains a matter of concern.
As we are aware, the inflation rate for the 12 months leading up to January 22, as released on Tuesday by Statin, was 9.7%, representing the sixth successive month that inflation has been above the bank's target range of 4 to 6%. The January 22 outturn mainly reflected high energy-related inflation due to increases in electricity rates. In addition, the prices for processed foods and services accelerated due to the continued lag and second-round impact of higher international grains and freight costs, which, as you know, have been the principal contributors to rising inflation over the past few months. Going forward, the MPC anticipated that without further stronger policy actions, inflation will continue to breach the upper limit of the bank's target range over the next 10 to 12 months and will peak in a range of 9 to 11% over this period.
Faced with continued price increases, the central bank is defending its ratcheting of interest rates with its latest 4% policy rate. The governor is hopeful that further tightening of monetary policy will influence a return of inflation to the target range of 4 to 6% in the latter part of 2022.